thank you for joining us this afternoon. Salesforce is very proud to be involved in Innovfest, Unbound, and celebrating innovation. We were recently named Forbes' most innovative company globally. And nothing makes us prouder and to give thanks to the many customers who build on our platform and find innovation, delivering new services and customer centricity. With me today, we have founders, we have CEOs of fintech businesses. I'd really like to delve into the passion that compels somebody to take risk, to actually join and follow their passion like these gentlemen have done. We've got Ross, CTO from Moneytree. Let's do the wave, mate. Sinuhe from TAIGER, and Geok or Dan from AIDA. And I'd like to kick off by just asking that fundamental question. What did each of you see in the marketplace to follow with such passion, to put it on the line, to follow your dream?
You want to take that first?
Yeah. I think we spotted inefficiency in the market, or we found that our technology could really contribute to solve a problem that we think is a larger scale problem. And we thought, why not? Give it a try, right? Yeah, for us it was quite straightforward, I think.
I came from a local research institute in Singapore, and we were working with companies in Singapore, large companies, and these companies have access to technologies from around the world. When you can provide them something and which they can deploy and make a difference, you're onto something interesting. So we decided to come out and form a company called AIDA.
Okay. Yeah, for us at Moneytree, we were living in Tokyo, and actually we're three foreigner co-founders in Tokyo. And we just kind of were saying, internet banking here in Tokyo is really not very good. Maybe we can improve that. So we really started from a simple concept of just, let's make people's lives better in this area, in finance area. And that's grown into, and we came with the belief that privacy, security and trust are the key for that. So we started there. And now as open banking has come along, we've really kind of rode this wave into the future there. And so we started out by just trying to put power back into consumers' hands, and it's really taken off from there.
Ross, I was just in a panel in the main hall, and open banking sort of really ignited active conversation. I'm not sure everyone's aware of what open banking is, but could you describe that, perhaps what the benefits or challenges are for both banks and end consumers?
Right. So open banking is really the first step to a broader thing called open data. And that is the idea that basically consumers' data belongs to the consumer, and therefore banks need to be custodians of that data. And eventually, in many countries, it looks like it won't stop at banking. It will affect energy, telecom, everybody along the way. So this won't just be a banking problem. So for consumers, it really means that they'll have the ability to direct their financial institutions to share their data with some third party that they want the data to go to along the way. Banks will have to provide a way to share that data. So for banks, at the very beginning, it often looks like a challenge for them because they have to create these systems. But it's also a huge opportunity because it democratizes data into the marketplace, and banks, just like everybody else, can take advantage of that data. And Moneytree, we try to help our banking partners do just that.
Thanks. Thanks, Ross. Sinuhe, you talked about inefficiencies and you saw these opportunities in the market to sharpen banks. A lot of banks are under pressure with, around profitability. What sort of areas in the bank are you seeing your solutions most impactful?
Yeah, so I think it's a known fact that the revenue in banking has been flat over the last 5 years. Actually, it's starting to decrease 3, 4, 5% per annum. That's a given fact, and most of the people, CEOs in banking, has accepted those facts. And this is on a global average scale. Of course, there is outliers. The problem is not the revenue. The problem is the operations. More compliance, more KYC require more people to read and extract information from documents, which banks do a lot. It's very paper intensive. So that's exactly where we go. We have technology that allows us to automate knowledge workers out of a specific task involving reading and extracting information from documents. It could be from a corporate account onboarding to standard settlement instructions, manual allocations in trade or in trading as well, right? And these are tasks that are cognitive, complex tasks that require expertise, experience, and training beyond what RPA is able to do, which is something that happens just at the interface, and it's just copy-paste or stuff like that. So we are helping them to, in a nutshell, increase operational efficiencies in the sense that it costs them less to process documents. They have less errors. They do it faster, so they can offer also a better service for the consumers.
Awesome. Dan, when we were talking earlier, you talked about deep learning and hardcore AI. I was quite impressed, right? But what are the use cases you look for? Like when you're approaching a bank, an insurance company, where is this type of implementation most impactful?
The technology, AI and machine learning is so powerful that it seems to be able to apply in many areas in an organization. So to make it easy for banks to understand its power, I just identify in 3 areas. The first area, we say anything that looks outwards to the customer, how to understand your customer better, so you can do upsell, cross-sell, and very personalized targeted selling. That's one bubble. We say that's for the CEO, increase revenue. The second area is the area where you can use it to improve efficiency. You know, you have processes and so on. Can you use it to reduce the time and effort to process a document, right? We say that's for the COO, reduce costs, increase efficiency. And the third area is for you to monitor risk and compliance. So when you look for unknown unknowns, right? You detect for things that are deviating and so on. So risk and compliance, and that's for the board.
And which of those are you finding you've got the most traction in?
Actually, right now we have products in all 3 areas. Currently, we're getting very good traction in the middle part, the automation part. We're seeing strong traction also in the front end. But on the risk and compliance, they're very, very cautious. So it takes a bit longer.
And Sinuhe, what sort of delivery options do you have? Someone wants to be on-premise, someone wants to be cloud-based. You know, what are you seeing banks wanting to do in this natural language processing implementations?
Very interesting because of compliance issues, and it's more the internal regulator than the external regulator. We always deploy both for insurance and banks on-premise. However, we're starting to see a trend for smaller banks in different jurisdictions, for example, Spain. They cannot really afford anymore the cost of on-premise installation. Is becoming very onerous. So they are trying to take the data outside and start to use cloud infrastructure to run all these functions and store the data, right? And that, of course, for us is very welcome because it actually decreases the cost of deployment. It lowers the ticket for the bank of adopting the solution. And this has been the trend, again, for the smaller banks. It would not be like Santander, BBVA, or Citi. They have enough budget for that, but the smaller banks like Bank Inter, it's a small bank in Spain, this type of banks, they welcome these solutions very much, that they can put it on the cloud. And now the internal regulator really starts allowing them to do that.
We're seeing similar, actually.
Yeah.
Yep. Ross, when people talk about open banking, they very quickly move on to trust. Trust must be fundamental to Moneytree and your ability to attract new businesses onto the platform as well as consumers. What's your point of view on trust?
Yeah, I mean, I think you identify trust is fundamental to our business, but what are the components of trust, right? So trust is, are you secure enough? Is your security implementations, a high enough level that you can build on top of that? Because without security, there is no privacy. Then, now you're secure, but are you really private? So there's plenty of organizations out there that are secure, but they say they take your data and then they share it with a third party in a way that's not transparent, in a way that you didn't really intend or anticipate, right? So we think privacy is the next thing. You have to be private and you have to be transparent. about how you're going to use that data and allow them to direct you in how they want that data used. So you need those three pieces together to be trusted. So we think it's really important that you're building on a secure platform and that you're building a secure system yourself and delivering that. Then you have to have the right privacy model, and we all know GDPR and other things are coming, which are in some ways going to force companies this direction. And then finally, you want to be as transparent as possible about the processes. And the best implementations of open banking are those. So open banking ideally is going to drive that into basically all banking in all different industries.
And how do you see open banking impacting the lives of people in this room?
Sure. So I mean, it's wow. It can be a very big question, obviously. In the near term, you'll probably just get certain things that were harder to do before will become easier. So you want to apply for a home loan, instead of having to go log in yourself, print out a bunch of PDFs, carry it to your bank or whatever and hand it over, you'll just connect and you'll pull the data across. And then they'll say, okay, great, you're approved, or we need to do the final KYC check of you showing up and signing the papers. So I think in the very early stage, you'll see that. But this is the type of technology where the total amount of innovation that will occur over 5 to 10 years will be surprising and interesting because once data is really available and shareable, people like Tan here and Sinuhe, they're going to be using all sorts of interesting models to do fun and interesting things that maybe we can't anticipate right now.
Thanks, Ross. And starting with you, Dan, and the question for the panel, if you look back to your first year, you know, when you potentially gave up your day job and decided you're all in with your respective businesses, what was critical? What was critical to get through that first year and to achieve some sustainability?
I think it's important to, when operating in an area like banking and so on, the customers are tremendously conservative. So we are a bit fortunate being in Singapore. There was a FinTech festival. So we participated in a FinTech festival and we won an award, and that kind of gave us that kind of recognition and helped us open doors.
Okay. Sinuhe?
So the first year, I don't know, you have to work very hard. I think we're very, yeah, there is no way around it. It's much harder than you think it. I mean, when I started my business 9 years ago, in 3 I was going to sell it. I was going to be doing something else. I'm still here. So I think building on what Mr. Tan said, I think we are very fortunate to be in Singapore. We are already expanding beyond banking and starting to tap in other verticals, but the good thing about Singapore is that most of the industries are represented. If you take away agriculture, all your industries are here, and they go very deep. It's very concentrated, and you can have access to a lot of people, and that is a very positive recipe for success. Of course, you have to have the right solution at the right time, and I think that's what really makes it. For us, I think is working with financial institutions is always it's challenging because they don't move at the speed that they should. And this is a personal opinion, of course. I met with recently with I will not name the name of the bank, but it was the global head of retail banking, and for Asia. He said, this is a Kodak moment for the banking industry. Most of the people has not realized, but it is, we are at that position because we are slow to react, we are slow to move, we are slow to make decisions, we are very heavily regulated. So I think initiatives like the ones under discussion today are really what is going to reshape the industry, and we're going to be seeing a new era of banking. Piyush Gupta said before, the CEO and director of DBS, people need banking, doesn't need banks. And I think in some transactional things that we do just going to be taken away from the bank simply because they are not reactive enough, they are not moving fast enough. In your panel before, this lady from Standard Chartered was mentioning they're the banks are losing the touch points with the customers, right? I mean, if you don't have the touch point and it's not Singtel or Facebook or whatnot, I mean, your business starts to disappear faster than you think. So I think that the most interesting is that they have not yet realized, or many of them have not yet realized, the crucial moment that they are living, and they are still being slow and unreactive to many of these things.
And all right, for me, I'll jump back to the original question of the first year. I'd say you need a couple things. One is I think you need good co-founders in order to. It's really hard to do something of the scale that we attempted on your own. Two, you need good partners. So one of the things we always try to do in our first year, we had to be able to focus on building a product that people wanted, and we couldn't focus on anything but that. So choosing the right technology partners and the right help, and we chose Heroku early on, allowed us to really focus on the product and not worry so much about underlying infrastructure and other issues. So that's really a big thing. And so to your point, I think banks have a lot of good infrastructure that they can leverage. It's just whether or not they're going to make that mental shift into the data world. And some will, and they'll become the winners in this long-term change, which is moving from the closed loop ecosystems that exist today to the open banking world. And the ones that do will actually find that it's even better than it is now. They'll be able to be more profitable. They'll be able to deliver to long-tail people. They'll be able to reach consumers that have never had banking in the way we have it today. So I think they will actually benefit. The ones that choose not to move into that future will not do so well.
It's very interesting. And Dan, have you got any stories come to mind of where you've approached a business, a particular department, brought your solution in and had an impact?
Right. So I think our biggest win, I would say, is that we started working with an insurance company in Singapore. Of course, they were a bit skeptical earlier on. We were fortunate that they tried. And then because they were willing to work with us, we developed a solution for them to do health insurance claims. And by their own words, they say they can now shrink the time it takes from days to seconds, right? So not just do they able to save the manpower, they're also able to give a much better quality of service to their customers. Okay. And that system is now live.
Sinuhe, any examples for yourself? Any examples?
Yeah, so we have, the best installation I have at the moment is with Banco Santander in Mexico. We are doing corporate account onboarding, which is very simple documents like ID cards and passports, all the way to powers of attorney, board resolutions, that kind of stuff, balance sheets, P&L. And we've managed to pull 95% accuracy for them. So basically, we automated the whole information extraction out of the corporate onboarding process. And we signed a contract with them, said this installation is going to work at 95% accuracy. For me, when we walk into that one, I said, look, I think we can do it, but I still had some reservations. And when I saw the KPIs, I was like, it really blew my mind. I mean, it doesn't get any better than that, right? I mean, even humans, first, they are not going to do it so fast. They are going to cost more, but they are going to produce more errors than we do, right? So that was a good one.
And so what sort of business case do executives stand up when they're looking to put in TAIGER?
It really, we really cover the whole spectrum. I mean, we don't have cases in banking is very wide, but we have from credit card onboarding, corporate account onboarding, mortgages, loans for the consumers and for the banks as well. If you move into equities and investment banking, we are doing standard settlement instructions, manual allocations, proof of underlying. In trade, we're doing purchase orders, invoices. If we move to insurance, we're doing claims and life policies processing for, we just finished a very good project here for one of the top insurance companies in the world, and we actually allow them to extract information that then they can do their machine learning, their projections, and all that stuff super fast and super accurate, right? So it really, we are not constrained by any application case. What we offer is the ability to read documents and extract information across the board. And we can teach the system really to read any document, no matter how unstructured it is.
Ross, if you think about Moneytree for a second, what sort of data do you ingest? So bank account details, transactions of things, right?
Yep.
What might people be surprised to hear that types of data you ingest?
Sure. So we ingest what we call financial data. But the thing that may be a little bit different for us is we have a really broad understanding of that term. So we think financial data is anything that you might use in order to get something. So the easy to understand ones, credit card transactions, bank balances, these sorts of things, but also stuff like transit cards. So in Australia we cover Opal and Maiki, and in Japan we cover Suica and Pasmo, these kind of things. Digital money of any variety, so you might think of like tap to pay cards or prepaid cards. And then the last one that everybody likes, once they realize we can do it, is airline miles and other kind of loyalty points. So we think airline miles can be a really strong thing in terms of you can buy an airline ticket with them, therefore it's financial data from our perspective.
Yeah, wow, okay. We've got questions coming up, and it wouldn't be a fintech festival or innovation festival without wanting us to speculate on Bitcoin. I've got no point of view on which currency is going to be globally accepted. I think we're going to be in a world. There was an analogy given on our previous presentation around why we still use different sockets in different countries, and I feel like currencies are no different, including those digital currencies. We'll have conversion, we'll have markets like coin to transfer between digital currencies back into fiat currencies. Any points of view there?
Specific to the question of one global currency, I don't think you'll ever have one global currency. Unless we had one global government. So maybe that's very far in the future. But I think you'll have a lot of crypto because it does enable some interesting use cases. And like one of the good things about it is it allows competition in currency as well. So I don't see why there would be less cryptocurrencies or why we would really coalesce into one per se, as long as they're aiming at different use cases. So Bitcoin is store of value, really, digital gold, and Ethereum is trying to be a platform by which you do smart contracts, and they both are currencies, kind of. So I think long term, you're going to have different coins for different use cases.
There was a question that flashed up. I don't know if anyone saw it from Lionel. Lionel, I'm not sure why he deleted that question. It was awesome. And it was around, make a comment on intrapreneurship versus fintech. So I'll help. It's disappeared. I'm not sure what happened. Lionel, come on, man. Be more confident, mate. It's a good question. We've seen banks, insurers, wealth managers begin to have innovation labs. They'll have labs and they'll have venture arms. So that your BAU then labs which operate in kind of the 6 months to year and a half, and then ventures which look to buy and partner for beyond that. We've had hackathons. We've seen people change dress code. We've seen a lot of things. We've seen like news agencies sell out of post-it notes, and people talk about customer journeys. We've seen people move from Disney, from retailers into banks as being customer experience experts. The industry's trying hard. The industry's seeing that it's no longer just access to capital, but it's a service business. But I'm not certain that the industry has been fast enough to compete with businesses like joining me on this panel, who have a very singular, driven purpose and are hitting that purpose each and every day with all the energy in the world. I'm not sure if any large business can compete with that passion.
You want me to go? Sure. So I think there's room for both. One thing that we do at Moneytree is we actually try to reconnect consumers to their banking institutions. So we have clients that are banks, and end consumers are also our customers. And so I think that there are, one example that we saw in Japan was the first adopters of our technology in banking were the mega banks. They were the biggest banks, because the biggest banks said they had the capability to say, you know what, data is a big important thing. We need to start moving in this area. What are our alternatives to do it? And the smaller banks were more along the conservative, like, is this going to be okay? Should we really do this? What about the risk and compliance? And the larger banks were willing to kind of make that leap. So I think it can be done, but also some of them took a year or 2 or 3 to get there. So can that accelerate in the future? I hope so. If it can, then they'll be fine. If they don't, then they won't.
Well, I worked for some very large companies before, and generally there's so much dynamics in a very large company that it's very, very hard for you to make things that are very different. So if you may have some incremental improvement, but you want to do something really different, I think there are too many constraints. You have to come out.
The decision-making process is very complicated. You cannot really identify who's calling the shots here, who has the budget, who's going to. It's so diversified in the group that is. I don't know.
I think it's easier to throw stones.
Yeah.
I think in the early days, a lot of things are unknown, right? At that point, you are really, really shaky, right? And then, if you have people to throw stones, easier to throw stones than the support, you're going to be in trouble.
Yeah. I think the other thing to think about is there are some very, very large innovative companies in the world, right? Amazon, Google, and they're making decisions quickly, and they're bringing products to market, and they're driving innovation in very, very different industries, including finance. So I don't think it's impossible. I think it's a choice, and and you have to. It has to, obviously, the top executive management has to really want innovation in a real way, not just go get me some innovation and then, so I can go up on stage and talk about it. But if they really do buy in, it can be done.
Let's look at this alternative data. So, I've seen this. You've got these businesses now doing lending based on how well you filled in a form based on your social profiles. Just an open question, if anyone's got a point of view on how they see that industry coming and what might be the compliance implications, even I'll extend on that, the credit implications of, are these models correct? Dan, do you want to start with this? This is unscripted, so I don't want to put you on the spot.
Actually, this is an area where we do some work in. And the idea is this. Every financial institution today have got a few barriers they've got to go through. First barrier is there's a regulator. Regulator says who you can lend to and who you cannot. So first barrier. Then the second is the bank themselves got their own sort of guidelines and so on. Even after going through these 2 hoops, they still have people who default, right? Meaning the rules are not perfect, right? So the trick is, can you either improve market share, that means open up, without increasing risk? Right? So can you do that? Then the idea is by using, say, alternate data, machine learning, and then can you then identify those people, maybe the ones that you did not let through, you should let through because they are good credit risk, and then some you maybe were let through but you pull back, right? And we done this, and by back testing you can validate whether your choices are correct or not.
You can also do it by reducing the cost of the operation.
No, by reducing the threshold.
But if you're spending so much money, right, in that operation, you reduce the cost, then you can
equivalent of
You change the risk profile, and then if you have a bad apple, well, it's not going to spoil your operation because you have more
margin to play.
Yeah.
Anonymous just raised an awesome question. Essentially, what will shape the banks in the next 10 years?
Well, I'm just going to keep saying open data. So we really, really see this. It's happening. Japan passed a law last year. Australia basically just said the law hasn't actually been finalized there, but reviews and recommendations are out. UK happened. EU is happening. So I really think that you're going to see, because of the ability for data to move, you're going to see a huge amount of innovation and increase in the capability to utilize data, and also in giving customers value in order to get them to give you data. So there's multiple steps there. Specific to the blockchain question, I would say, blockchain is a good technology for certain things, and it's got to find the right use case. And central banking seems to be a very good use case for it. Internal to a bank, less interesting.
I think in 10 years, probably banks are going to be different shape and color, more specialized. I think they are going to lose all the retail part of the bank. We're going to see companies like Facebook or Alibaba or any of these really that actually own the touch points, really taking that business away from them. I think they are going to be focused more on the wealth management, on the investment side of the banking, where their advisory services and their expertise and their knowledge can really make a difference, and you really need to have a closer contact with the customer. But every touch point that can be easily automated or eliminated or put to a different place, I think they are going to lose it unless they start moving really, really fast.
Actually, I agree with him. What will shape banks in the next 10 years actually may not be the banks themselves. It's the non-bank players playing in the field that may be in a better situation to take a lot of that retail market.
And I think that that customer centricity is really going to drive banks, whether it's via competition, via fintechs, or via regulation or political pressure. I mean, if anyone here is from Australia or familiar with the situation unfolding in Australia, the Royal Commission it's in cooking magazines. Like it's escaped the financial realms, and people are talking about it at barbecues. I went for a run the other day in one of my old banking shirts, and I swear people were giving me death stares. Like banks will actually start to need to put the interests of their customers ahead of profits. This is what fintech have brought to the table. They've had a single purpose and seen a gap in the market, usually around putting the customer first, and that's how they've picked off various elements of value in the financial chain. And I think that's what you'll see change in banks, whether it's brought about. Open banking will certainly bring that, because apps like Moneytree will actually teach people how to manage their money better.
Right.
I think apps will start to identify inefficiencies. If somebody is about to miss a credit card payment when they've got money sitting in an offset account, or warn you and say, if you don't do this, you'll attract a fee. I think that third parties are in a better position to do that than a bank, who may stand to benefit from giving that advice or not giving that advice. So I think between open banking regulation, the power will genuinely shift to the consumer, and the consumer will be able to pick and choose various components to make up their financial life. And then you'll have apps and services which will sit as your coach or agent, which will then advise you which product is best for you. As I said in the other panel, I think the days of having retirees running across the beach with a dog following them to advertise products may be in trouble. I think we could be appealing more in the future to these apps or these agents which say, Ross, your credit card spend has been this over the last year. The card you're using, it might have a frequent flyer reward attached to it, but the annual fee you're paying is not actually delivering the right number of points. This more vanilla product suits you better. Go with this one.
Yeah. And I think that institutions can also get in on that game if that's where they want to do. So I think there is a lot of area to either improve the existing relationships. So I think most people are not walking through there every day going, you know what, I really need to switch off my bank and do something else. Right? If you're happy with your bank, you're going to stay. But you also need your data in more than one place. Like, you don't just need it in your bank. You need it when you do your taxes. You need it when you want to open a new account. You need it when you want to get a home loan or a second home. You need it when, in the United States, sometimes you need it when you want to apply for an apartment, right? They say, let's check your credit score, and if your credit score is good enough, you get into the apartment. So I think that there's all these different areas where data is going to touch, and what we want to do is make sure that we put the control with the consumer so that they can direct it in the right place, and then give the tools to the institutions to deliver really great experiences. And that's not just apps, it's data experiences, right? It's how to, ideally, the scenario you just described where I don't have enough money to pay the credit card in the main account that's connected to it, but in this other account has it, I didn't even know, right? They moved the money, it paid off the credit card, I got a push notification saying, we did that for you, all good. And then I just go about my life, right? Consumers want to just continue living their life and have their banking work for them. They don't really want to be thinking about how do I make it better? They just want to get a better experience.
So if you think about open banking just quickly, I think we're in a world now where that's like a passive experience, just the data out. I think we'll get some point where it's active. You actually give these apps permission to act on your behalf with some parameters, and then, as you say, then that changes everything.
Absolutely. And in the UK, Write APIs were part of the first rollout, so there already is the ability to not just read, but take action in the open banking world. So.
We've got, why don't we do one more? Oh, this is a question from Anonymous again, but I think there's a few fintech companies wondering which banks are going to talk to them. And it's which financial institutions are probably most receptive to work with fintech, I think, if I paraphrase question 2 there.
Maybe you guys can do,
which one?
In the Singapore specific, which institutions would be innovative, do you consider innovative?
Oh, for me, Banco Santander. 3 years ago, they started working with us. And I was very positively surprised. I thought, for once, a financial institution really thinking how to apply technology to solve a real problem that they have, as opposed to spending tons and tons of money and maintaining legacy systems, right? So they are the ones that first came to us and said, we want you to build this information extraction solution. And they gave us the business case, right? And that has, for us, was what opened the wave of this growth that we're seeing. Of course, there are many along the way, and some that realize that need to be more innovative than they are. For example, AIA. I think they genuinely understand where they stand and where they want to be, and they are making as much as they can to get there.
I think it's a journey, right? If you look back 5 years ago or 10 years ago, I think the banks today are a lot more open. Could they be better? Of course, they could be better. But in Singapore, all the 3 major banks, they all have incubators, and they are using the incubator as a vehicle to work with the fintechs so that they can try it out. So is it ideal? I think it could be improved, but it's a step. Yeah.
And just to expand on that, one final question. When you're approaching a bank or when you're addressing a market to see which banks to go after, what does approachable look like? What are some of the qualities that you see to go, this is going to be worth investing in terms of getting the business?
In our case, we try to go to the business directly. So where the root of the problem is, we are in the operational efficiency improvement. So CEOs and anyone in that department is going to be our target. We don't go to CIOs or if we have another angle, we don't go to the innovation arm of the company.
Right.
Because that's actually, the sales cycle in B2B and especially in banking is long enough. So you go to the innovation guys, you are going to sell once, going to do the project, you're going to be successful, and then they have to go and sell to the business. So you, instead of looking at 9 months, you start looking at 18 if you are successful. So as much as we can, we just cut through and say, go directly to the business guys that have the pain, that have the budget, and just go with it.
I agree with that completely. One thing that I think is a big issue in the banking world there is that so many of the innovation teams or the lab teams are not really able, they don't have the political power to actually take whatever proof of concept they did and roll it out. If they really had that power, then they'd be great, but they don't. So typically you have to go and find the right decision maker in the bank that can actually say yes and move forward. And that is a big challenge. I think banks, if they could really empower their innovation teams and give them that authority to go up to a large enough number, that would be a big step forward in terms of being more innovative.
Good point. Definitely. Definitely.
Ladies and gentlemen, we've seen what hard work, what spotting an opportunity in the market with conviction means for fintech and for banking generally. Please join me in thanking these kind gentlemen for joining me today.